Salute, folks. It's your boy, the insurance junkie, your fiduciary fella, the all-star advisor Alonzo Hall, your social media insurance bro and registered financial consultant. Back again today to whap and tap on your head with another ADH Wealth Solutions article. Today is an article that I wrote via Substack in regards to a LinkedIn post that I saw by a very respected financial services industry professional by the name of Cheryl J. Moore. Before I continue, make sure you hit that like, drop a comment, subscribe, and hit that notification bell so you're made aware every time I release new content. And as always, share, share, share. Lastly, to contribute to channel growth or to schedule an appointment with a licensed financial professional for an evaluation of your own, the links are in the description of this video. The nickel versus the dime. Why broker-dealers are missing the boat on life insurance. If you spend enough time looking at how the financial services sausage is made, you'll eventually notice a glaring paradox. Full-service national broker-dealers, or BDs, technically sell life insurance, yet they seem to avoid it like the plague. Recently, a discussion sparked by industry expert Cheryl J. Moore highlighted a fascinating statistic. Direct response sales of life insurance are vastly outpacing independent broker-dealer sales. It begs a simple, almost rhetorical question. Why don't national BDs like life insurance? The answer from the trenches is surprisingly blunt. To borrow the exact words of one broker-dealer executive in that same thread, it's an operational nightmare. And because of that nightmare, firms are choosing to make a nickel rather than a dime. Here is why that mindset is fundamentally flawed, both for the bottom line and for you, the clients that they serve. The operational nightmare illusion. Let's be fair. Compared to the frictionless environment of gathering assets under management, or AUM, or executing securities trades, life insurance can feel clunky. It avoids underwriting, medical records, APS, attending physician statements, delays, complex compliance oversight, and prolonged sales cycles. BDs are built for speed and scale. When a product introduces friction, the instinct is to push it away. Many firms would rather refer the business out to independent agents and take a small cut, the nickel, than to build out the infrastructure to handle the business in-house and capture the full revenue, the dime. But avoiding friction doesn't eliminate the client's need. It just outsources the solution. The fiduciary's blind spot, the CFP and Series 65 conundrum. This operational avoidance creates a massive disconnect on the front lines, particularly for professionals holding the CFP certification. Many CFPs pride themselves on offering truly holistic, comprehensive advice. Armed with a Series 65 license, they act as an investment advisor representative, managing portfolios and building incredibly detailed financial plans. But here's the catch. To maintain a strict fee-only model, or simply because their BD discourages the operational headache, many of these planners do not hold an active life insurance license. This creates a massive conundrum. They are perfectly qualified to diagnose a critical vulnerability in a client's risk management or estate plan, but they are completely unequipped to implement the solution. The client is left to navigate the market alone, vulnerable to being sold a product that completely misaligns with the careful, holistic plan the CFP just built. The term-only cop-out. Even when these advisors and BD reps do hold their insurance licenses, the operational aversion still rears its head. How? By defaulting almost exclusively to term life insurance. You've likely heard the standard industry pitch. Just buy a massive term policy. The only reason anyone needs a permanent policy is for ultra-high net worth estate planning. On the surface, it sounds like pragmatic advice, but pull back the curtain and you'll find the real driver is often pure convenience. Term insurance is simply much easier to push through the underwriting process. Why? Because the insurance companies know the statistics. Well over 97% of term policies never actually pay out a death benefit. The terms expire long before the client passes away. Because the ultimate risk to the carrier is statistically low, the underwriting isn't nearly as meticulous or agonizing as it is for a large face amount permanent policy. By pushing term, the advisor avoids the prolonged APS delays, the tedious back and forth, and the heavy lifting. It is the path of least resistance, disguised as objective advice, leaving the big dimes on the table. When BDs and their reps treat life insurance merely as a necessary evil or take the easy way out with term-only solutions, they're completely sidelining themselves from advanced planning conversations. Permanent life insurance is highly versatile. In the hands of a skilled professional, it is a dynamic tool for tax planning, wealth preservation, and business succession. When a firm refuses to navigate the operational hurdles of permanent life insurance, they miss out on orchestrating Section 162 executive bonus plans to attract and retain top talent, collateral assignments for vital business loans, estate equalization and liquidity planning for families, and tax advantage accumulation strategies for clients maxing out traditional retirement accounts. You cannot claim to offer elite wealth management while effectively avoiding one of the most powerful tax and estate planning vehicles in the United States tax code just because the paperwork is annoying. The true cost of outsourcing. When you refer a client out for insurance or take the easy way out with a quick term policy, you fracture the holistic strategy. The firms and professionals that will dominate the next decade of wealth management are the ones willing to embrace the complexity of implementation. Yes, the underwriting process can be tedious. Yes, the compliance requires vigilance. But the dime isn't just a higher payout. It's the solidified client trust, the complete control over the planning architecture, and the fortified moat around your book of business. It's time for the industry to stop tripping over dollars to save nickels. The operational nightmare is just the price of admission for doing the job. So that's it for today, folks. Wipe ass, work in progress every day, and see success. Salute.